And welcome to the latest episode of Harrington on Sweatin Money, episode number 31, recorded on March 27th, 2016. We may or may not have ownership or other positions in the stocks mentioned on the show. Don't buy stocks based solely off what you hear from this podcast, and always do your own homework and research before investing in stocks. I'm your host, Kong, along with my co-host, Gibson.
Great to be here in the studio.
Let's take a look at what's in the news. Household spending and home building are making the U.S. economy look like it's doing better than what Federal Reserve Chairman Janet Yellen was saying at her last public meeting. A lot of the spending was actually in consumer spending services like recreation, and not so much in manufacturing.
Well, spending is spending.
Part of the slump this week in stock performance was due to news of another terrorist attack on Brussels, and just today, we couldn't edit the slides in, but there was actually an attack in Pakistan as well. Now, this last attack in Europe was in Brussels, which hosts the seats to the EU Parliament and administrative headquarters. Pakistan, sadly, you don't hear much coverage of that because they don't have that much economic significance to the U.S. So,
makes sense.
By Wednesday, however, news that oil, after rising back up for a bit, will be slumping back down, as everyone is now predicting more crude oil stockpiles than was earlier expected.
That kind of makes sense too. I mean, if we increase our supply, but we also reduce our consumption, then it could lead to this exact problem, which we want to reduce our consumption due to environmental factors as well, global warming and whatnot.
I don't think the consumption itself is going to get lowered. I mean, prices are going to get lowered, so consumption is naturally going to raise. But I think it's because, mainly because the OPEC countries can't really come to a deal. I mean, they may talk about coming close to one or trying to get one, but usually things like this is going to take. I mean, it doesn't seem like it's likely to happen, especially since Iran is going to be coming online with their oil production. So,
I mean, theoretically, that could hold true and might be valid, but there's also the huge concern of global climate change and man-made induced global climate change and the repercussions of global warming and so on. So I think as that becomes a more serious and dire issue, is that despite the fact that oil has become cheaper, our consumption shouldn't change too much, assuming that people actually care about surviving for more than a couple of decades.
Yeah, well, China doesn't give a crap about their own economy, and they just keep pumping crap into the environment. So, hey.
Hopefully, we got to do something about it because I don't know. I don't think there's going to be another generation for humans if we keep this up.
And on that depressing note, here's another one. Lately, people have been talking about Yahoo. I know, very depressing. Some have rumored that Verizon was thinking about buying them out, and then a hedge fund called Starboard Value LP would try to shake up the members, or, well, really kick out everyone on the board. Now Microsoft is thinking about buying out Yahoo. Possibility?
Yeah, I mean, they could increase their online footprint by acquiring Yahoo. I mean, I'm not sure if their Bing is doing too well, but I definitely don't like using Bing.
I mean, I don't like using Bing either, but I think it's still much more successful than Yahoo.
I guess. I don't know. We could take a look at how much traffic Bing and Yahoo gets. And if Yahoo has more traffic than Bing, then there's a compelling case for Microsoft to actually acquire Yahoo. If anything, maybe even Google to acquire Yahoo just to keep Microsoft from obtaining it. But at the same time, I don't know. It's I think in terms of search engine traffic, I think Yahoo still takes a considerable amount because I think a lot of people. I think Yahoo is actually not blocked in China.
No, it was for a while.
I see. Has it been unblocked?
Good question. I'm not sure. Last I heard. Well,
I think that the.
No, yeah, actually, it is still no. It's not blocked, but they had some issues with the government, and so the Yahoo headquarters in China was they basically pulled out of China. So while it's not necessarily blocked, a lot of the services that used to be there is no longer available.
Yeah, because I think a lot of the the things that are important to this transaction will pretty much hinge on that.
Yeah, but I don't think buying Yahoo is going to give Microsoft any better exposure than what they already have with Bing. I mean, honestly.
Well,
I mean, if you're talking
right
about
now it's kind of like an oligopoly. The entire internet search engine, the search sector is pretty much bisected into like Bing, Yahoo, and Google. So
don't forget there's a Russian Yandex.
Sure, why not? I mean, I guess each country is gonna have their own little search engine, but then again, I don't know. There's already, I feel like Yahoo and Google have been such a dominant player in the markets. I mean, you go to China, people know there's a Chinese name for Yahoo is awful, and they basically just use it all the time. They just use it for everything. It becomes like a term, like fuck or something. It's like very highly interchangeable. You could go to Yahoo to chat. You could go to Yahoo for search. You go to Yahoo for texting people. Of course, this was before the introduction of WeChat and what's the other one? WhatsApp. These chat engines or QQ.
Yeah, but I mean, WeChat, and all that other stuff, like Tencent, not QQ nowadays, but whatever that new product is that Tencent has. Anyways, all that stuff is way more popular than what Yahoo is. Yahoo doesn't have nearly the same sort of brand name that it has, that it used to. It doesn't command the crowds like it used to. Just say 5 years ago, even.
Well, we could take a look at the web traffic which is available online to see how
it's
much.
It's all going to Baidu, in China at least.
I see. Well, I'm just saying if they have a considered more higher share than Bing, then it might be a compelling case for Microsoft to acquire Yahoo.
Possibly, but we'll see. Let's take a look at the week in review. I couldn't pull Monday's numbers on here, but basically continuing off of last week's momentum, stocks kept rising until about Tuesday afternoon, which is where we saw a bit of the struggles, and then it kind of came back down. This is once again due to that terrorist attack on Brussels and other reasons as well. Now, this past Friday, the U.S. markets were closed due to Easter. Good Friday, Easter, which is today. And
Happy Easter.
Yeah, happy Easter. So let's take a look at the international markets. And on the day that I want to feature the Australian stock market, which is the first major stock market to open in the Asian Pacific region, well, if you can consider part of that region, unfortunately, they were closed on Friday as well, and Monday they're closed. So, yeah, these are old numbers. The same goes for New Zealand. Now, as of when I gathered this data point, the Nikkei was actually up by 0.76%. And so was the Korean Kospi and even the Shanghai Composite Index. And the only thing to buck Taiwan was slightly up as well. Now, the only thing that bucked the trend was Hong Kong's Hang Seng Index. The reason for this is because this is also not updated. This is last Thursday's numbers as well. They were also closed last Friday and closed for Monday, just like their former British colonial territories, territorial brothers, I should say, New Zealand and Australia. So, yeah. Anyways, let's take a look at the playbook. Again, Again, just a reminder, none of the following should be misconstrued as financial advice or investment advice. This is merely for documentation only. Theta decay has caused my GLD puts to actually lose money. I'm coming close to the expiration date, and even though it's fallen back down to former price levels, I'm still losing money or losing value on this option. So, on the other hand, Knut and Phillips, I might actually gain some money off of this one. So we'll see how things go tomorrow. Well, what about you? What do you have stock-wise?
tiny bit of like Bank of America. It's just been going up and down. Like, as I predicted, just a high level of volatility in the market right now with no clear indicators. I think everyone's still highly concerned with the global, like, the global economy, and we're not going to pick up or go down, and then terrorist attacks, oil prices, and whatnot. So I'm going to keep with my conservative approach of just a small amount of capital into Bank of America. So right now it's not too bad. It's about where I kind of bought it, maybe made a little bit of money, but not too much. Bank of America is not a stock that should move that much anyways in the first place.
All right, well, let's take a look at the week ahead. Dallas Regional Federal Reserve's manufacturing survey will be released tomorrow on Monday. Regional Federal Reserve heads and Janet Yellen will speak on Tuesday. And the job cut report, jobless claims, and Gallup poll on jobs rates will be released on Thursday, along with the federal balance sheet. Friday, the motor vehicle sales and employment situation report will be released. So, and internationally, Japan's household spending report, unemployment rate, and retail sales numbers will be released tomorrow on Monday, where we'll see or actually they should be released soon, and we're going to see how the progress with Abenomics is going. The EU will release their money supply report, and then we'll look at how negative rates are going for the Swiss. So, yeah.
Oh, I have a short on Caesar that I forgot about.
Caesar? Like, what? Which Caesar? You mean like the dog food company?
No, like Caesar Entertainment.
Oh, that's Caesar. Okay.
Yep.
Caesar Entertainment, huh?
Yep.
Any specific reason?
I believe that they were supposedly going out of money. Actually, they're like, supposedly they're going bankrupt. A certain division of Caesar, they're not as popular, and I think it might be the casino division.
How much have they fallen so far?
I'm not too sure. I'll take a look at it because I completely forgot about it altogether. But I think they were thinking about declaring bankruptcy, so might be a good position. But also very small quantity. I invested maybe like 500 shares or so, made like 134.
Huh.
But very dangerous to have shorts and not be aware of it. Very dangerous. That's roughly it. I mean, I think that if they're not doing well and they had to declare bankruptcy, I'm banking on them actually possibly declaring bankruptcy. And then if they do, then I could be in a good grip of money.
Yeah. All right. Well, let's move along to the recommendations then. 5 rookie mistakes to options, and I've done, 3 of them at least. So read this. If you're smarter than me, you'll actually understand and prevent yourself from running into these same issues that I have. The 3 of them that I've met up with are trying to buy options close to earnings. May not necessarily be good because it has to move substantially. Otherwise, if it moves a bit and you buy something that is still in the money, you may get assigned, which means that you will have to end up buying the actual shares on the expiration date. Or you have to sell some of these shares at a loss. I mean, even though technically they made money, just because the loss will come from the fees that you have to pay. The second mistake would be not understanding how implied volatility can affect options prices. So depending on what the volatility is, how the volatility is calculated, options prices may change from day to day, and actually from minute to minute, really. And also failing to understand time decay, like I did with GLD. So you can check out that website for the full list. So that's it. Just a reminder, we may not have other positions or ownership in the stocks mentioned in the show. Don't buy stocks based on what you hear this podcast, and always do remember to invest in stocks. And of course, don't